Check it out, guys. So we had a couple companies report earnings after the bell that I want to break down in this video. We're going to go over the numbers. We're going to break down the stock charts and go over what I'm looking to do with these companies. So if y'all find value, hit that like button. Make sure to subscribe. And of course, don't forget to get up to 15 stocks for Moomoo. Link down below. It is free money, guys. Once you open up an account, you get one free share of stock right off the bat. And once you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And if you deposit, well, not if, once, because you guys want all the free stocks you can get, right? Once you deposit at least $1,000, you get 10 more stocks, totaling 15 free stocks. And listen, guys, if you don't like the Moomoo platform, that's okay. You can literally take out all your deposits and you keep all the free stocks. And of course, it helps out the channel. I appreciate you guys as always. So use that link down below. Let me know what stocks you get in the comments. And with that being said, let's break down some stocks, some numbers, and some good old earnings. So the first stock I want to break down is none other than Disney. And mind you, guys, I actually haven't looked at these earnings yet, so we're going to get a live reaction for all these numbers, except for the one company that reported this morning. The first one, again, is Disney. They reported after the bell, and let's see how the stock is doing. It is down $5, $4 or $5 here after the bell. In other words, around, let me see here, percentage-wise, it is down 5%, 4.5%, 5% here after the bell. That's not looking that great for Disney. So they ended up doing, let me come down here a little bit and see, they did EPS of 93 cents, which came in line with the expectations on revenue of $21.82 billion, which beat the $21.79 billion expected. So right in line with EPS there. And again, they beat on sales, which is nice. And it looks like here domestic channels revenue decreased 4%. Disney Plus paid subscribers came in at 157.8 million. Paid subscribers are actually down 2% year over year. That's not that great for Disney Plus. And it looks like ESPN paid subs are up 2%, as Hulu paid subs are flat right now year over year. So ESPN Plus is barely growing. Disney Plus year over year is declining a little bit, about 2%. And total Hulu subscribers were right around 48.2 million. So I mean, if you add up, guys, all the different subscribers that they have for Hulu, for ESPN Plus, for Disney Plus, we're talking multiple hundreds of millions of subscribers to these services, right, guys? Pretty intense there. And let me see what we have in terms of guidance. I'm not seeing anything really on guidance, but overall, again, the stock is down about $5. And honestly, guys, I'll probably do a deeper dive on this one in my Patreon. I started this new thing on Patreon where I'm going to be doing a deep dive on 2 companies per month. And I'm not talking about just a 5-10 minute video. We're talking about maybe a 45-minute video where we dive into the annual report. We break down the charts. We break down the financials, because I do more than just breaking down charts, guys. I know a lot on this YouTube channel. A lot of what we talk about is charts. We break down a lot of technicals, but I also look under the hood. And by under the hood, I mean, the financials, the annual report. You have to really do a lot of digging in a company, especially if you're looking to invest in it for the long term. It's not just all about charts, guys. There's a lot that goes into it. So if you guys want to be a part of the Patreon, you want to see that, the 2 stock breakdowns per month, make sure to check it out. Link down below. Shameless plug, guys. But yeah, Disney's now down 5%. And full disclosure, I do own Disney. I just actually, started buying more of it. I think a couple weeks ago, I bought more in the low mid-90s. And now that we're getting back in the mid-90s again, you guys guessed it, I might be buying even more on Disney, especially if it starts coming down under 90. We'll see how the earnings call ends up playing out, and how the price action is looking after that. Hopefully it goes under 90, maybe tomorrow, maybe at some point later this week, next week, so I can pick up even more shares. So that's Disney, guys. Ticker symbol DIS. The next one I want to break down is Robinhood, guys, which this is one that I've been very critical about over the past couple of years. I've told you guys, especially, when they went public, I think, when was that? Years are flying by, guys. Years are flying by. When was that? 2 years ago, they went public. I forget exactly when it was. Yeah, about 2 years ago. Look at that. Back in July, probably July of 2021, probably the best time to go public at that, at that time, right? It went all the way to $85 a share. Now it's at what? $9. And after the bell, it is spiking up a little bit, but still not so much here. So it looks like Robinhood ended up losing 57 cents on the quarter, which beat the loss of 61 cents expected. And they also beat on revenue, $441 million versus $424.53 million expected. So they beat EPS, they beat on revenue, and it looks like here they see full year 23 GAAP total operating expenses of around 2.34 to 2.48 billion. All right, interesting there. And let's see, Q1 transaction-based options revenue at $133 million versus the estimate of 139, so that came a little bit under the estimate. Crypto revenue came in at 38 million versus the almost 40 million expected. So options revenue and crypto revenue came in under the expectations. Not the best sign there. And monthly active users came in at 11.8 million monthly active users versus the estimate of 12 million, and net funded accounts at 23.1 million, million accounts, which came in line with the estimate. Pretty interesting there for Robinhood. And overall, guys, I think personally, I mean, sure, the user interface is awesome for Robinhood. It's great, but in my opinion, there's way better brokers out there. For sure, in my opinion, like the one I use mostly is Fidelity. I do have some money on Moomoo as well. Webull, I dabble in there as well. But Robinhood, I'm not the biggest fan of, honestly. It's super basic user interface, which is great if you're a beginner. But personally, guys, I'm not a beginner anymore. I've been in the stock market for almost 10 years at this point. Yeah, probably pushing 10 years. Pretty crazy. And I'm just, I like the platforms that have more advanced features. Like Moomoo has definitely more advanced features than Robinhood. Same with Webull, and Fidelity does for sure. But I'm not crapping on Robinhood completely. They're decent. I mean, if you're a complete beginner, I would actually recommend you go use Robinhood. But overall, guys, this stock has not been doing anything for the past 2 years. Of course, retail, not all of retail, but a lot of retail has lost interest in the stock market over the past year and a half, right? Hence why a lot of the finance YouTube channels stopped uploading. A lot of them aren't growing like they used to. The views weren't what they used to be, and I can attest to that, guys. I am a finance YouTuber. The views are not what they once were, but we're still trucking along, right? We're still here trucking along. And yeah, I mean, retail lost interest. A lot of them did. And that really, really, really hurt Robinhood. It doesn't hurt Fidelity as much, doesn't hurt some of the other traditional brokers as much, but it does hurt Robinhood. Trust me on that. You guys can see again, their stock has been pretty much hovering at 10, 11, 12 bucks, $9 for a good year and a half at this point, right? So we'll see how it goes over the next couple of months, weeks here for Robinhood. I'm not a big fan of it, but I'm still going to be keeping an eye on it. And I'm also looking at the Trade Desk, which reported earnings today, and look at their stock go, guys. It looks like the ascending triangle we called out is playing out here on the Trade Desk. Let me pull up the live news tab and see what they ended up doing. So they did EPS of 23 cents, which beat the 12-cent expected, and they also beat on sales. Look at that, $383 million versus $364.5 million expected. So double beat there for the Trade Desk. And let me see what else is going on here. Anything on guidance? It looks like here they issued strong Q2 guidance. That's good. You can't complain about that. And again, we hit a fresh high after the bell here at 71 bucks, and we've since pulled back a little bit to 65, 66, but we're still holding above the highs from earlier today. We're holding that point, which is great. And it looks like, again, the ascending triangle is starting to play out. So the Trade Desk, guys, is looking pretty good. It's starting to break out. And on the 3-year chart, what's the all-time high on this thing? All right, let's see some levels that we could be going to. Maybe it goes mid-70s. That's definitely possible. That was the high from, when was that? August. Now that we're seeing the ascending triangle play out, that's the first spot that I can see this thing going. Maybe it goes up even higher. So the next one I want to break down, guys, is Roblox, ticker symbol RBLX. Let me pull this up. Of course, a lot of little kids are on Roblox. I mean, this is not something that I've really ever used in my life. I mean, I'm not going to lie to you guys, but I talk to my little cousin sometimes, and I'm like, yo, do you guys like Roblox? And let me tell you, a lot of them love Roblox. They play that stuff all the time, and the game's on Roblox, and this company has been doing decent over the past couple of years. Sure, growth has slowed down, like a lot of growth for growth companies, but they're still doing pretty well. You guys can see the stock today went up over 7%, and they actually reported earnings in the morning. They did EPS of negative 44 cents, which actually missed the 40 cent in the red expected, but they did beat on revenue, $773.8 $766.8 million versus $765.9 million expected. So they beat or rather missed EPS, but they beat on revenue. And let me see if there's anything on guidance or monthly active users or anything like that. Daily active users, okay, it says here daily active users for Q1 on average were 66 million, up 22% year over year, and hours engaged up 23% year over year. So that's pretty good. I'm liking that for sure. And coming down here a little bit more, let's see, anything else? Not seeing anything else. But overall, guys, look, Roblox is a growth stock, no doubt about it, and it's starting to break out now of the 50 SMA. We are arguably overbought. I mean, you guys can see the RSI screaming red right here on the 4-hour time frame. But if this thing does cool off a little bit, maybe pulls back to the mid 30s, maybe even lower 30s, preferably mid-30s, right around that 50 SMA on the 4-hour chart, that could end up opening up a decent opportunity, at least in my eyes, here on Roblox. So if you guys got up to 15 stocks yet for Moomoo, if not, use that link down below or go to stassurfest.com/Moomoo. Once you guys open up an account, you get one free share of stock right off the bat. And listen to this, once you fund your account with at least $100, you get 4 more stocks totaling 5 stocks. And once you fund your account with at least $1,000, are you ready for this, guys? You get 10 more stocks totaling 15 free stocks. So if you guys want some free money, you want to help out the channel, use that Moomoo link down below. It is greatly appreciated, guys. And with that being said, let's talk about the last 3 stocks for the video. Number 1 of the last 3 being Toyota Motor Group. Let's pull that up, or Motor Corp. Either way, whatever. Toyota ended up reporting earnings this morning, I believe, and their stock did decent today. And actually, funny enough, their earnings are not even listed here on the live news tab. Great. I probably should have looked up the headline numbers before this video, but it's all good. Whatever. Either way, the stock went up around 2% on the day. They reported, it looks like here, $2.83 in EPS. I'm not exactly sure, again, what the revenue is because it's not listed here. Let me see. Let's see. Full year sales revenues, 37 trillion yen. Holy smokes. 37 trillion yen, guys. I wonder how much that is in US dollars. Obviously not trillions of US dollars. But that's up 18.4% from the prior year. And it looks like here, guess who's back? Guess who's back? Back again. Nightshade's bold style returns to the Toyota Corolla family for 2024. And I'm a shameless owner of a Toyota Corolla myself, guys. I'm actually a big fan of Toyota. Their cars are just great. They're meant to last long. They're very cheap to maintain. And I'm not a flashy car guy. That's not me. It's just not me. I much rather have a affordable car that I can ding up. Well, I'm not going to go ding it up on purpose, but, if it gets dinged up, I don't really give a crap, and, if we rack up miles on it, I know it's not going to collapse for the most part, knock on wood, and that's what Toyotas are to me. They're great. And the next car I probably get, I'm not going to lie, it's going to be a Toyota. I kind of like the 4Runner. I'm a big fan of the RAV4 as well. We rented a RAV4. I believe it was last summer. We rented a RAV4. We took a road trip to Ohio. Yeah, that was last summer. Either way, the RAV4 was great. I loved it. Spacious, nice car. The 4Runner, I've never driven it, but either way, we're not going to get into, the Toyota rabbit hole in this video. But needless to say, I'm a big fan of Toyota. I have a Corolla, and who knows, maybe at some point, I might be a purchaser of one of the, bigger models, let's say, of Toyota. So, yeah, the stock has been breaking out the past couple of days. It went up 2% on the day today. Now it's starting to take the highs out from the end of March. This is definitely heading in the right direction for the bulls. And guys, look at Google. Google did not report earnings today, but my goodness, did their stock move. Look at that. Up 4% on the day, and it's completely now breaking out. Freaking finally, right, guys? We've been struggling to take out $110 for months, literally about 3 months, and now with today's 4% move, well, we took out that level. That's looking good. Now we close right at the highs here from the beginning of September, which by the looks of it, guys, momentum could take us right through those highs, and this could be going right back to 115 in no time. And you guys know, maybe you don't know, I don't know, but my biggest individual stock holding is Alphabet, also known as Google. I've owned this stock for years, and it's been my biggest holding for years. I mean, for definitely a couple years at this point, right? So I'm loving it. You guys know I'm loving it. This is music to my ears, and it's not a trade. It's a long-term investment. You know, I'm not going to sell out of my long-term position now that it went up. But, of course, we love seeing our positions go up over time and, you know, pretty much proves our convictions, you know, at least in the short term. We'll see. I mean, for all we know, in a month or 2 months from now, Google could be under $100, but now it's looking pretty good. And honestly, I wouldn't mind if it went back to, you know, 85, 90 so I could buy more of the stock, but either way, it's doing very well right now. And Amazon's been another one that I've been buying, although this is not on the list for today, but Amazon did very well today as well, up 3.3%. Now it's starting to fully break out and head back to the highs from the last earnings report and the earnings report before that, being about 115, 120. I think that's where it could be going in the short term, guys. So the next one, the last stock for the video. By the way, if you guys stuck till the end, let me know in the comments. Say stuck till the end. I know TikTok has freaking destroyed everybody's attention spans out there. So if you're at the end of this video, it's a 15, 20-minute video. You guys are awesome. You guys have not been TikTokified, or you know what I mean, right? Either way, you know, it's crazy actually. On a side note, back when TikTok wasn't as crazy as it is now, the average minute view duration on my videos was, I think, 8 to 9, 10 minutes, and I haven't really changed too much of the length of the video. Sure, some of the videos I make now are shorter, but the longer videos, now the average view duration went, again, from 8, 9, 10 minutes. Now it's like 5, 6 minutes, so a lot of you guys aren't tuning in for the whole video, but it is what it is, right? So the next one is CRM, which is Salesforce. This is one that we called out a couple of videos ago, and I believe I called it out on my Patreon as well. We called out the ascending triangle. You guys can see now with today's move and yesterday's move, we're fully breaking out. That's a good sign for the bulls. So now, by the looks of it, guys, CRM could be well on its way. I mean, it is well on its way, in my opinion, to the high here. You guys can see from the end of March of not this year, but last year, 220, you know, $220. That's where I feel like it could be going. And if that were to break, guys, we're talking an even bigger move from there. Let me set my alert. Mark is at or above $222 per share. So, yeah, we'll see, guys. Those are a couple of stocks I'm looking at. Thoughts on some earnings. And again, we're going to do 2 deep dives per month on Patreon, and I'm probably going to do one on Disney this month here in a couple of days. So if you guys want to be a part of that, check out the Patreon link. Don't forget to also get up to 15 stocks from Moomoo, 12 stocks from Weeble. And with that being said, cheers, guys. I'll catch you in the next video.